Friends, welcome back to the channel. So 2025 is your year. You have stumbled upon this idea of owning commercial real estate and you want to buy your first investment property. This video is 100% for you. This video is meant to arm you with the facts, the mindset, and the action steps that you can take to begin your investment journey today, this month, this year. Whatever your goals are, tuck this in your back pocket and consider me a help and support along the way. Honestly, super exciting. Really cool when I think about it. I've read a lot of real estate biographies and they all started, the most successful people, billionaires, started with one single property. And maybe that is you. Now you might be thinking, I hope I get there, but hope of course is not a strategy. Today we're turning hope into understanding and mindset. Now one of my favorite posts to comment on this entire process of all time, which I return to often, is by a gentleman named Nick Huber. Nick is the Sweaty Startup on Twitter, which you may know him by. He's a self-storage investor turned developer. Now he owns a bunch of companies like somewhere.com and many others. And he has this wonderful mindset that I'm gonna ask you to adopt with me in this process of buying your first investment property. Now, what he posted was, if you can't analyze a real estate deal on the back of a napkin, you'll struggle to make money. If you can't analyze a real estate deal using a 10-tab Excel model with over 5,000 cells, you'll struggle to raise money. Now, what does this mean? It means that something as complex as commercial real estate is actually simple enough to be boiled down and put on the back of a napkin. In a lot of my conversations with clients who are investing for the first or second or third time happen over coffee at Starbucks, where we're doodling on the back of napkins to sort of understand and me guiding them through the process, which I'm gonna do with you today. Of course, we can return later to Nick's idea that you have to understand how to navigate through a 10-tab Excel model to raise money from people and run point on a complex investment. However, if you're just starting out with your first property, these concepts are where you need to live. All right, to buy your first commercial real estate investment property, you need to understand the following 4 things. All right, we're going to start with capital. Now, obviously, capital is super important. Why? Questions you need to answer might include, how liquid are you when it comes to purchasing property? Meaning, how much cash do you have saved up that you don't need to live on that you can invest in property? This is paramount in understanding what direction you want to go because it determines what direction you can go. The fuel of the entire business is cash. Now, this gets into your goals with money. And so I would ask you, what are they? How much do you need this property to produce? Are you looking for cash flow? Are you looking for a tax shelter so you don't care if the property breaks even? Do you have a desired return? And what else could you do with the money? Maybe commercial real estate's not the best place for you with today's returns. I don't know, but these are all answered by looking at the amount of money that you have to put towards a deal. Now you might be thinking, Justin, I'm using OPM, baby. I'm going for other people's money. And I would just kind of caution you and say, yeah, maybe, probably not your first deal. Will you be raising a bunch of money? But you could. For example, you might have a private donor or a family member or someone that will lend you cash to get started. And if so, that's great. Videos like this will only serve to help you maximize their return and do it again and again and again. And by the way, that's a huge and important disclaimer. And one of the coolest things that I can tell you today. Real estate people will often tell you they're not very smart. They just learned how to do one simple business plan and they executed it over and over and over and over again, which is phenomenal. So, how much capital do you have to bring to a deal? Next, who needs to be on your team when it comes to property purchases? Now, I know what some of you are thinking, which was, I clicked on this because I was searching for property in process. And it's true, but it's people that will likely lead you to every deal that you ever have. Or at the very least, it's people that own deals that you'll buy that you'll actually make money on and see your net worth grow. So you cannot get away from people in the real estate business. embrace it, and just start building your network. And people don't really understand this, I've found, but you need folks on your side. People like brokers, for example, okay? Great brokers are basically walking instruction manuals on how to negotiate deals, how to put together offers, maybe in the form of an LOI, for example, and many commercial transactions start that way. And a great broker will guide you through various timelines on the aspects of deals that you need. They'll negotiate on your behalf. Maybe most importantly, they'll run point on the due diligence process where you actually inspect the commercial property to make sure you want to buy it and that it doesn't have disastrous problems. Buying the property right is, of course, the key. And one of the things you can do to protect yourself is have a strict due diligence process consisting of things like this and this and this and this and these. Having a team that helps you run that due diligence process will save you thousands of dollars in the long term. Who else? Well, of course you want a great attorney. You gotta have legal. They're worth their weight in gold. They might write a PSA. They will help you through the legal aspects of deals like zoning. They'll run title on the property, close it, and transfer the deed. You have lenders. Lenders, of course, are going to provide you with the debt that mixes with your capital or your equity, which is going to improve your returns. And that's a story for another day. But lenders obviously are absolutely crucial. Now, this list here is not exhaustive. For example, I didn't even mention a property manager, someone to run the property, inspectors, appraisers. These are just a handful of the professionals that you need and you will want on your team as your real estate career develops. The main point is you don't have to go about this solo. You want to go about this with a team as we get into our next subject, which is the actual property. Now, there are a few questions I always ask when it comes to an investor who's thinking about buying a property for the first time. What market is it in? How much does it cost to build? How much does it cost to lease or rent? And how much does it cost to run? Just to review those questions real quick so they're embedded in your mind and heart and soul as you go throughout those processes. The market is super important. Real estate is not just local, it's ultra local, okay? You gotta figure out what's happening in your specific market, and we'll talk about more of that in a second. What does this property cost to build? You certainly want to buy it below its replacement cost in case it's empty and you need to sell it. What does it cost to lease or rent? And is that property in demand or is the demand following? Great question. And lastly, how are the expenses of this property handled? As in, who pays? You or the tenant or a combination? Now, one thing I've loved to do with clients over the years, it's just such a fun topic because every single building that you see out there, every single building is a small business. And every small business has revenue, it has expenses, and hopefully it has profit. So I like to discuss the various property types. Let's take office, let's take industrial, let's take multifamily, and let's take retail. And let's just discuss these for a minute as if we're looking at each individual revenue and expense that will then take us to our bottom line. And in commercial real estate, that's called the NOI. The NOI is the holy grail, and it's the cash left over after you've collected rent, paid expenses that you have to use to pay debt and then potentially put cash in your pocket. Now, each property type, office, industrial, multifamily, and retail, they're nuanced in how the typical leases are drawn up and how the tenants pay and what expenses are paid. But you want to dig in and get granular knowledge on, let's say, an office property in your market that you're thinking about buying. Okay, it's on the market. Well, I would immediately ask, what is the rent? And is the rent going up or is the rent going down? What are the expenses? Are the expenses going up or down? And who pays for the expenses? You want to analyze each of these. So let's take an industrial property that's bringing in, let's say $8 a foot and it cost $1.50 a foot to run. Now we understand very quickly how much profit or NOI we technically would have if this property ran exactly right. But then I want to ask the question, what is going on with this rent? Is that market rent? Should that rent go up? Could it go down because it was a lease done above market rent? I want to ask about these expenses and I want to understand, okay, they're $1.50 right now, but what if the building is reassessed? What if my commercial insurance is higher? What might that mean for the bottom line? So you're going to get in and get granular. Last thing with this table, and we'll use multifamily as an example, is this will teach you the concept of value add, which is huge in commercial real estate. What could you do to this rent number in multifamily to send it up? For example, if you did new cabinets and countertops in a new bathroom, would a tenant potentially pay $250 more? And if you have 86 units, you can obviously see how that would affect the bottom line if the expenses remain the same. But wait, the expenses aren't remaining the same. Actually, our insurance is going up, which is a major thing happening in multifamily right now, though it's kind of evening out a little bit. But the key to value add is understanding what can you do to the property. Maybe you don't change a thing, but you take a regular multifamily property and you make it an Airbnb. So all of a sudden you're now bringing in double the amount of tenants, but you're collecting another 40 to 60% in revenue. Of course, that's gonna affect this NOI or bottom line. Like I said, every single commercial property you see in the world is not just a little habitat for people to live, work, or play, or store stuff. It's actually a small business, and you're going to become a master of this small business. All right, my friends, we've talked in terms of capital that you're going to deploy into a project. We've talked in terms of a team that will arm you to buy and run that property in the right way, in the right legal posture towards it. We've also talked about a specific property, the market it's in, what it costs to build, what it costs to lease, what it costs to run. Now we're getting to the fun part, and that is deal flow. You have to position yourself downstream from deals, right? You've got to be in the action. There is no excuse to sit around and say, there are no deals left. The truth is, deals are happening every day. You might have missed one today, for example. So yes, you may have the help of a team and a great broker. If you're in Central Kentucky, happy to help you, but you are the captain of your own deal flow. This means you're scouring the internet, sites like LoopNet or Crexy or Facebook. Make sure right now you commit to being a student of your market. And one of the ways you can do this is setting Google alerts for companies that are moving into your town, for example. The reason for this is commercial real estate really is an ecosystem. People who move to work in your community also need to live there and eat there and shop there. So industrial growth can lead to housing growth and retail growth and so on and so on. But the entire point, my friend, you are the captain of deal flow. So get out there in front of brokers or wholesalers, the news, the information, get into Facebook groups or online groups, whatever it takes to expose yourself to high quality deals. I mean, the crazy truth about it is you might have to see 100 before you even buy one. Now, this video focused on private investors buying as individuals, but if you are truly interested in investing in real estate private equity as a limited partner, you might check out this video, which is here or here, not exactly sure which. It's going to provide education on the opportunity to find a sponsor or GP that you trust to do all this work while you are a sort of passive partner in the deal, which has its advantages and disadvantages. My friends, this was the very first video I've launched that speaks directly to investors. I'd love to hear your thoughts below. Would you like to see more how-tos? Maybe underwriting with specific properties, touring specific properties, how to buy, maybe even the due diligence list, which I threw up some examples of. If you'd like to see more how-tos, drop it below in the comments and would love to scratch where it itches with this wonderful audience. So thank you, friends, for watching this video. I hope it helped, and we will catch you in the next one.